So good evening, everyone, and I welcome us all to the Get Finance and Investment Tips webinar series. And today we'll be looking at cracking the new Nigerian tax code, what it means for your income, business, and investment. And we have the great privilege of getting an expert to come and discuss with us in this community, Mr. Babatunde Olaniyi, who is a director in the tax unit of PwC Nigeria. So before I introduce him, I would like to just remind us, for those that are also new, of our vision in this community. The community is currently, we're over 2,000 in different WhatsApp groups. And the main vision for this community is for us to build a financially empowered community where individuals develop a strong investment mindset, achieve financial freedom, and create lasting wealth for future generations. So without wasting much of our time, I would like to quickly read through the bio of our special guest speaker today. Out of his busy time, this is a very busy period for all tax experts, given the new rule that have been introduced in Nigeria. If we all recall that this is like in the last 30 years, this is a long time that this has happened. And for most tax experts now are really very busy. So we really appreciate him granting us this honor to be able to come and break down how this impacts on our personal life, on our savings, on our business, as well as on our investments. So starting with the introduction, Mr. Babatunde Olaniyi is a director in PwC Nigeria's corporate advisory services practice with over 13 years of experience in tax compliance and advisory services gained across PwC Nigeria and PwC United Kingdom. Please, I would like us to be using, we can use the emojis to at least the virtual clap to appreciate him as I read his bio. It's very loaded. His expertise spans a wide range of industries, including oil and gas, financial services, telecommunication, consumer goods, logistics, media, and pharmaceutical. He has led and contributed to numerous advisory, tax audit, and financial reporting engagement from a diverse portfolio of clients, including multinational corporations listed on the London Stock Exchange, indigenous listed companies, private oil and gas companies, and power companies, and one of the Nigeria's leading diversified conglomerate. His area of specialization include tax structuring, financing structuring, project structuring, financial model reviews, and mergers and acquisition, including tax due diligence services. Babatunde leads the Pan-Africa coordination effort, ensuring in-depth technical input on tax and regulatory implications across the affected territories. His role was pivotal to ensuring that local tax considerations are thoroughly addressed and integrated into the broader Pan-African advice. So with excitement, I would like to welcome our guest speaker for today, Mr. Babatunde Olaniyi. And please, we'll take the questions after his talk. You can also type your questions and we would read the questions. So please, can we, with the virtual hands, can we please just appreciate our speaker for today? Mr. Babatunde Olaniyi, thank you for coming, for showing up. Please, the floor is yours. Thank you.
Yeah, good evening, Mr. Mojuda. Can you confirm you can hear me loud and clear?
We can hear you clearly. Sounding very far.
Can you hear me? Is it best? Is this better?
Or is it from my hand? Can we confirm we can hear?
I don't know if you can hear me well.
Okay, can hear you now.
Okay. So good evening, Doctor, and our dear moderator. How about now?
Yes, it's clear now, loud and clear. That's
Okay, okay, fantastic. Right. Thank you everyone for having me this evening. So as Doctor had mentioned, um, this is a very busy time for tax consultants in Nigeria, and that's just because some informational changes have happened by the president when on the 26th of June is signed into law for tax reform acts, right? And this is something that has been long awaited. There has been some changes during the Muhammad Buhari presidential regime when they made changes to the Finance Act. Right? So we had four Finance Acts between 2019, 2020, 2021, and also 2023 as well. Right? But those made little changes that are not as transformative as what we see coming in the new laws. Now, one of the big questions that one would ask is why now, right? And one of the things that easily comes to mind is that from a fiscal standpoint, Nigeria really struggled in terms of our budget deficits increasing, our poor revenue. At one point in time, right, for every 1 naira Nigeria earns as revenue, we pay over 90 kobo of that to service debt, right? And this was exacerbated by the COVID-19 era where government needed to print money to support Nigerians. And we know how that happened through ways and means and how that contributed into inflation today that is hitting into the purchasing power of Nigerians and also the profitability of businesses as well. Now, aside the fact that the government needed to turn to taxes, as we know, crude oil, which has been the main source of revenue for government, has taken a challenge, right, in terms of the fact that the prices are very volatile, right? The prices currently between $60 to $70 per barrel, right, which is below the benchmark of $75 per barrel that we use in our 2025 budget, right? So currently the price is below budget, right? We also know that production as well, oil production, is one that is also very volatile as well, given what is happening right in the south, although getting better, right? So a situation whereby we do not um, control our production. We also do not control the oil prices of our mainstay of revenue. That is really not a sustainable way of planning the budget for the country. So the way other countries have done it, right, Nigeria is looking to do the same, right, is through taxes, right? If we look at the tax to GDP ratio, which is the indicator that countries use, right, to measure the health of your tax collections, right? Nigeria currently is at 13%. This is a significant increase from 6%, which it had not less than 2 years ago, right? And this 13%, right, part of the reasons why it jumped up 13% is because they started calculating the taxes that are collected at the state level and also at the local government level, right? But even as the revenues have increased and the tax to GDP ratio has improved, right, we're still far below, right, our neighboring sub-Saharan countries, right? Some of them even have a poorer nation than Nigeria, right? A less strong economy than Nigeria, but they collect more in terms of taxes, right? So they do an average of 18% to GDP ratio, right? While we're currently doing 13%. If we go to the European countries, the OECD benchmark is do around 34%. France, being one of the countries that have the highest tax to GDP ratio at one point kind of collected 40% of their GDP in terms of taxes. So pretty much other countries have made taxes their mainstay, right? And that's another reason why Nigeria is doing this as well. The other thing is the reason is the fact that there are some holistic reforms that have happened from a fiscal standpoint under this administration in terms of removing the subsidy in the PMS market, also floating the naira, and also partially removing the subsidy in the electricity sector, right? All these reforms, right, has led to a high cost of doing business in Nigeria, not only from a pricing standpoint, but also inflationary as well. Even though some of those reforms are started to bring stability, right, the expectation is that with the new tax laws, right, that will create the perfect pathway for investments to come in and individuals to get an increase in disposable income by virtue of the reforms, and that will create the demand that would spur economic growth. The other aspect again is to address multiple taxes, right? One of the things we know we characterize the Nigerian tax environment is multiple taxes. So taxes that are achieving the same outcome. So a typical example of that we see is the VAT on consumption. We also see consumption taxes as well as the states. Now, not to state the fact that the VAT that is collected, even though it's collected by the federal level, is redistributed to the state government. So the state governments are collecting VAT at 7.5% of consumption, right? And they also have consumption tax laws as well within the states as well. So they collect both VAT and also consumption tax. So that's double taxation. From a company level, you see companies paying things like tertiary education tax, the Nigerian Information Technology Development Agency levy. You also see the NASENI levy, right? You see things like the host community trust fund for upstream companies, oil and gas companies. You see NDDC levy, right? All these levies create a situation whereby businesses are incurring multiple taxation, increasing their cost of doing business in Nigeria. Then the other aspect again that this law is looking to address is where some of this multiple taxation, right, is coming from laws that are not tax laws, right? So you have tax laws that impose taxes on Nigerian individuals and businesses, and you also see laws, right, that are not tax laws but impose taxes, right, on businesses, right? A typical example of that is the police trust fund, right, that I mentioned, or the NASENI levy, right? So these are laws that were meant to establish the Nigerian science and engineering infrastructure, right? But in there, part of the source of funds is 0.25% of the profit before tax of companies in certain sectors, including oil and gas, telecoms, banking, and things like that. So this law as well was meant to address that. Now, on the 26th of June, the president signed into law 4 acts, right? And the key questions that the acts are responding to is one, what taxes should we pay in Nigeria, right? And that is embodied in the Nigerian Tax Act, right? The second key question is, how do we collect these taxes, right? And that is in the Nigerian Tax Administration Act, right? The purpose of that act as well is to harmonize the way we collect taxes in Nigeria at the federal, state, and local governments, right? Because each state has their own tax authority, right? Companies that do business across the 36 states and the FCT, right, have to deal with tax authorities at the federal level and also at the state level as well, right? So you have to deal with the FIRS, which is going to be the Nigerian Revenue Service, and you also have to deal with the different state tax authorities in 37 states, right? And you also have to deal with local governments as well, right? So this actually could create an environment whereby your people in your organization would just be responding to tax queries, investigation, audits, and you don't even have time to do the core reasons why you're in business, right? So there was a reason, that was the reason why embodied in this act, right? There is an act now to say, let's harmonize the way we collect taxes and let's ensure that the different collecting tax authorities do that in a very uniform manner, in a way that is easy to administer. The third key question, right, is establishing the tax authority. So we have the Nigerian Revenue Service Establishment Act that is repealing and replacing the FRS Establishment Act of 2007. And the fourth key question is how do we create an oversight body, right? And a body that is responsible for coordinating the different tax authorities, right? And that is the Joint Revenue Board Establishment Act. Right, so those are the four acts that were signed by the president. Now, if we want to look at some of the key changes, right, that affects Nigerians as a result of this change, as a result of these new laws, right? So the first big one, just taking taxation of individuals, right? Now, that affects us at a personal level. One of the key objectives of the policy behind the new laws was the fact that there was a high inflationary environment. So how do we, right, protect the poor and the vulnerable, right, and exempt them from paying taxes? Now, one of the reasons how this law has done that is that has increased the exemption threshold, right? So previously it was the 300,000 naira. But what this law now says is that if you earn up to 800,000 naira annually, you pay no tax, right? If you earn up more than 800,000, right, but less than 25 million in a year, your taxes will reduce compared to what you're paying now, right? But if you're earning above 25 million a year, right, your taxes are going to go up. Now, the objective behind that is to ensure that if you look at the total number of individuals who are going to be taken out of the taxable net because of the exemption, and also the individuals whose taxes are going to reduce, right? The expectation is that will cover a huge aspect of the Nigerian workforce, right? And to make the tax system for individuals one that is progressive, right? Where there is less burden on the lower earners and there is more burden on the higher earners, which is aligned with the principle of taxation, right? Whereby the more ability you have to pay, the more you pay. So by this, right, there is going to be reduced tax burdens on individuals, and it's expected that would lead to a higher disposable income for individuals going forward. One thing I should mention is that the effective date of the new laws, based on what we're seeing in the media, right, is 1st of January 2026, right? So even though the laws have been signed in 26th of June 2025, it doesn't take effect until 1st of January 2026. And the expectation is that would allow to give more time for the administrators to get ready, right, to implement the law. Right, it will also allow private businesses, individuals as well, time to study the law and how to organize their affairs in a way that will make the best of the laws in terms of capturing opportunities and ensuring compliance going forward. Right. So I've spoken about the income tax for individuals. The second thing I want to talk about that affects individuals, right, is the VAT rate. Right, so the VAT rate was not increased; it was maintained at 7.5%. Even though the policymakers had intended to increase it to 15% progressively over 5 years, right? The governors forum objected to this, right? And they actually got their way by keeping the VAT rate at 7.5%. This is despite the fact that our rate is one of the lowest, right, in the world, right, in terms of VAT collection. I think we only compare, right, with the Gulf nations, right, UAE, Oman, now all the other countries that have VAT rates at 5%, and this is countries that usually do not depend on tax as the main source of their government revenue. And the other aspect is, and key aspect here, is the expansion of the zero-rated items or VAT exempt items. Now, one of the things that they had looked at is, given the fact that Nigerians spend money, what are their spending behavioral habits, right? And they looked at the fact that food alone constitutes 60% of majority of Nigerians spending, right? They also looked at areas such as accommodation. They looked at areas transport, health, and education, right? So the expectation is that a lot of these activities, right, occupy or cover up the salary spending of individuals. And one of the things they have done in the VAT Act is to make all this exempt, right, or zero rated, right? So that means that there won't be VAT on those items. So a lot of the food items are exempt, except if you go to expensive restaurants, that's where you then pay VAT. Accommodation, your rent is exempt. In terms of transport, public transportation is exempt. In terms of education, school fees down up to tertiary education is exempt. In terms of health, medical services are also exempt, right? So the expectation, right, is that this will definitely contribute to making those services to become affordable, right, to Nigerians. The last part, which is a bit technical, but I will try my best to simplify, right, is the ability to let businesses claim impute VAT, right, by making some of these exempt items, some of these zero-rated items, um, um, zero-rated, right? Because the law expects you. So let me give an example, right? So if a school now, right, or let me change the example. So for a bakery, right, they bake bread. Now, bread is exempt under the old law, right? Now, but if the bakery wants to buy a packaging material, right, to package the bread in a fancy way that can attract customers, that packaging material is vatable. Now, bearing in mind that if I've incurred VAT on the packaging material and I'm selling the bread to you, now because bread is VAT exempt, right, I won't charge VAT on it when I'm selling it, right? But I've already incurred VAT on the packaging material, even though I didn't incur VAT on the flour and other items that went into the bread, but I incurred VAT on the packaging material. So the question is, how do I recover the VAT, right? So in that situation, I cannot recover the VAT. So what suppliers will do in the past is that they will increase the price, right? So commercially, they can recover the impute VAT. But now the law has made bread zero rated. What that means is that I can keep the price as is, and instead of me recovering the VAT from the customer by increasing the price, I can go to the government to say, I have sold a zero rated item and I've also incurred VAT in my value chain, right? So give me back the VAT, right? And this will happen. So it's expected, right, that this will help. And we see this, right, across very important sectors of the economy. So we see this in food, we see this in education, we see it in health, right? So it's expected that by making these products and services zero rated, these businesses can recover their VAT, not from the customer, but from the government, right? And hopefully the suppliers would pass on these savings in terms of reduced prices to the customers. So that's pretty much in individuals. For companies, the big thing that they've done for companies is to expand, right, the the definition of what a small company is. So before, a small company was a company that earned 25 million naira or less, right? So you don't pay any tax, right? But what they've done now under the new law, although we don't know what the final number is, right? We've seen different numbers in the different bills, right? Is that they've expanded it from 25 million to 100 million, right? We've also seen 50 million news, but I'm going with 100 million because that's the version I saw in the harmonized version of the bill that was sent to the president for accent, right? Um, so there's increase from 25 million to 100 million. So what that meant, or what that means, is that once a business is earning let's say 90 million today in terms of revenue, right, that company will be exempt from tax, right? So today, that company will be subject to tax at 23%. So 20% company income tax, 3% tertiary education tax. But following this law, the company will not pay any tax. Right. So, and that is pretty much trying to support small businesses that has seen their profitability being eroded by cost of doing business and also inflation as well. When comparing, they're looking at their profitability from a dollar or a foreign currency term. The other one that they have done for small businesses, aside from exempting their profits from tax, is the introduction of what we call the tax ombudsman, or because Nigeria chose to be gender neutral, right? They moved the man, so we call, as in the law, tax ombuds, right? So the tax ombuds is meant to be set up. So it's new to the Nigerian landscape, but it's something that operates perfectly in other jurisdictions like South Africa, like Rwanda, where the tax ombuds support businesses, right, that don't have the wherewithal, whether the knowledge of the tax laws or even engaging with tax authorities where there are disputes. So the tax ombuds will come in, right, to mediate and protect the taxpayers' right in that respect, to ensure that small businesses pay their fair share, right, of taxes, right, and not allowing the tax authorities through their aggressive taxes push these businesses to pay beyond what the ordinary would have paid if they had gotten sound advice from professionals. The other aspect which I think would help expand investment is what we call the focus on priority sectors, right? So it's they call it under the Act the Economic Development Incentive, whereby government has said certain sectors like manufacturing, power, renewables, mining, refining, um, information, communication infrastructure, all these industries are high priority. And if you invest in those sectors, you would enjoy certain tax reliefs, right? So it's expected that this will spur investment into in those sectors, and thereby promote economic growth. The last part I want to speak about is for large companies, the tax rate is 30%, right? But there is a pathway in the law where the rate can reduce to 25%, right? But the framework is one whereby an order would have to be issued by the president upon the advice of the National Economic Council, right? So that would then reduce the CIT, companies income tax rate, from 30% to 25%. There's also been the introduction of what we call the harmonized development levy. So it looked at all these multiple taxes that companies pay, right? So the police trust fund levy, the NITA levy, the NASENI levy, right? And said, okay, let's harmonize all these things into one. So the economy does not have to be paying all these different amounts, which are based on different bases, right? So let's just consolidate it, and the company just has to make one payment, right? So thereby harmonizing it for ease of administration and compliance, right? So all these things are expected to support businesses, right? And also support individuals, right? In terms of giving reliefs, exemptions, and hopefully it spurs more business activity and growth. So I'll just stop here now to see if there are any comments or questions. I'm happy to take those.
Wow, thank you so much. I know it's a very bulky report, so for you to be able to even extract and give us this and break it down for us, we really appreciate it. And I know you can please start dropping your questions. There are also some questions that I also have here, but just some of the major points that we need to also note that you've mentioned. Firstly, is that the effective date is likely going to be 1st of January 2026. So for those that are expecting that their payslip would be reflective of the new personal income tax. So please, you still have to wait for some months. Also for the businesses, the essential items, which we also see as very positive as individuals. So it means that our disposable income would increase, given that some of these items, the rate at which they would increase, their costs would also be minimized. And for small businesses, which I also have a question, I'll come on it, but at least that's savings. So for some of us that have businesses, that it's the turnover. So it's good to, like Mr. Babatunde Olaniyan, is the turnover that you use to calculate, not your profit. So once your turnover cross the 100 million, it means that you would now have to pay tax. But that's savings. So you would imagine saving 23% of your turnover that you'd have paid in the past. So that's also very positive. So now I want to, before I ask questions. So for instance, some of us have been hoping that how will my tax be calculated? You know, with the old law, yes, we get our pay slip and we see the different taxes. But now, based on the new structure that has been done, personal income tax, how will it impact? What's the new rate? How does it now impact? What should I expect by the time it's effective in January? Yes, I don't know if you can.
Sorry, can you repeat the question?
Okay, the question is that, for the personal income tax that have been also revised. So we have a lot of members that are working, and now how does that personal income tax, how will it affect them? Because like you mentioned, for companies that the threshold has been adjusted, what's the new threshold, what's the tax to expect even when it's implemented? That's the first one. Then I'll ask the second one, because we also invest together with as a community. This capital gain tax, how will it also affect us? Because what we are seeing is that it has increased from 10% to 30%. How does that one, how will it also be applied when it's effective? So those are the initial two questions before I go to the members. Thank you.
Yeah. Okay, so just checking that I was not muted. Yeah, so the first question, in terms of the personal income tax calculations, right? So the law has amended the bands, right? And it is through the bands, right, that you calculate your income tax based on your taxable pay. Now, one of the things that the Tax Act has done is that it has removed the consolidated relief allowance that used to be there, which was 20% of your gross income plus 1% or 200,000 naira, whichever is higher, to be used. Right. So what the committee had done is they had done some data-driven analysis to know how much is the bandwidth that will need to be exempted in a way that relieves and protects the poor and vulnerable, and also ensures revenue for the government. Even as the rate has been, the income exemption level has been taken from 300 to 800. There are some state governments that believe that the 800K exemption is too high, right? Because they believe that a lot of their states, right, are civil servants dominated, right, that don't earn up to that, right? So their own personal income tax revenue is expected to reduce. So even taking it higher, right, would have created some rancor, right, among the people. But in terms of how you then calculate it, right, you take your annual income, right, and the law allows you to take certain deductions, right? So you could take your pension, your national house NHF, your national housing fund, if you have any life insurance or any annuity program on your life or on your spouse, right? You also have NHIS, Nigerian Health Insurance Scheme, right? Deductions that you can make. The only other one that has been included in this case, right, is one where if you provide the rental information of your landlord, right, you could get up to a maximum of 500,000 as a deduction, or 20% of the rent amount, whichever is lower, right? So by the time you aggregate these deductions, right, you then arrive at what your taxable pay is, and you then subject it to the tax band, right? So the first 800 is 0%, right? The next 2.2 million is taxed at 15%, right? And you go up from there. Now we had modeled it internally, right? And one of the things that we saw outcomes exactly what I said, right? That if your annual income is 800 or less, you pay no tax. If your income is above 800 or less than 25 million, your tax is going to come down, right? But if your annual revenue, your annual income is above 25 million, your tax is going to go up, right? So it will go up marginally, right, until it gets to a level whereby you arrive at the effective tax rate of 25%, which is the highest rate in the bank, right? So that's how you compute your personal income tax under the new law. Now, for capital gain tax, one of the things that the law has done and captured in your question, right, is to increase the tax rate, right, for companies from 10% to 30%, right? But it doesn't work like that for individuals, right? Because the way the law has captured it, capital gains will be subject to your normal income calculation. So if you are a company and your tax rate is 30% because you're not small, right? You then want to take your profit from a normal trading activity. Let's say your profit from a normal trading activity is 1 million and your capital gain is 500. Then they will add both your trading profit and your capital gain together and they will tax it at 30%. But for individuals, if your income, say 2 million, right? And your capital gain is 500, right? So your total income that will be subject to the tax band, right, will be 2.2 million plus 500, so making 2.7, right? So you then go up to the tax band. So the capital gain tax rate for an individual, right, is largely dependent on where they sit within the band, right? So, and that can vary from individual to individual, right, depending on if you're a high earner or a low earner, right? And now, when it comes to capital gain on shares, right, the law has given an exemption, right, whereby if you sell shares that is below 150 million, right, you sell shares that is below 150 million, and the profit on that sale is not above 10 million naira, right, that transaction is exempted from capital gain tax. So if I sell shares today of say 50 million naira, and the capital gain on the transaction is 5 million naira. Because that sale is below 150 million and the profit on that sale is less than 10 million, right? That transaction will be exempted from capital gain tax. But if the sale does not meet this exemption threshold and is above that, right? The law says that if you reinvest the proceeds, right, into another Nigerian company, right, then that transaction would then be exempted from capital gain tax because you reinvested it into another Nigerian company, right? So you have two exemption thresholds within the capital gain tax on the sale of shares. And one is if it's below 150 million, right, the profit is less than 10 million naira, or even if it's above this threshold and it's taxable, if you reinvest the proceeds into another Nigerian company, into the shares of a Nigerian company, it will be exempted from CGT. If these conditions are not met, then be subjected to tax.
Wow, thank you so much for this. It's very, very explicit, and I think especially I'm seeing questions around that. So I will quickly just go through. So I may batch the questions so you can note them because some of them may be repetitive, but it's because of also our time. So let me just start from the Q&A before I take those that are raising their hands. So can see, given the rates of inflation and poverty level, I think it's really government tax individual earning below 800, below 500. So that has been answered. The threshold is 800,000 per annum. How is one able to claim input VAT in the new tax law? I think he's touched on that, but maybe you may just highlight it, that he touched on that during the presentation. Please, can you talk about double taxation between companies? Is there a provision for same in the new law? Then I will just batch then can you help with a listing for tax relief for employees? That's already that's like consultancy work. I'll see if he can touch on it briefly so that we do. Then are churches taxable or exempted? Then there's also the question on how can is the relief on investment between okay, is there a relief on investment where VAT or withholding tax is deducted? Yes, so I think let's take that batch questions briefly.
Okay.
Yeah, thank you.
So thank you very much. So in terms of the comments around those that given the environment, right, those that earn 500K and below should be exempted, right? I want to believe that comment is 500K monthly, right? And the honest truth is there are other countries that even have higher thresholds, right, or exemption thresholds, right? South Africa, for example, even Kenya, right? And one of the statistics that the chairman of the Presidential Committee on Fiscal Policy and Tax Reform says is, despite the high thresholds, what South Africa generated, right, through personal income tax is higher 3 times than the total revenue that the entire federal, state, and local governments in Nigeria earned from all sources of revenue, including taxes, including oil, right, combined, right? And that's really what they earned, right, from personal income tax, right? And one other data point is that a huge portion of that is paid by their high net worth individuals. Now, the huge focus here is how do our tax authorities leverage technology, right, in order to be able to ensure compliance by our high net worth individuals in Nigeria. right, in the way whereby they pay tax and they contribute. So that will give government the fiscal space, right, to even expand this threshold going forward. The other aspect is on impute VAT. One of the things that government is trying to do, right, in as much as they've expanded the law, right, for it you can claim impute VAT. So under the outgoing laws, you could claim impute VAT, but it's very restrictive, right? You can only claim VAT, impute VAT against output VAT where you are a manufacturing company that is manufacturing something that is vatable, right? Or you are a trader that is buying and selling items that are vatable, right? But now, right, law now allows you to claim VAT on services, right? On also on fixed assets, right? Where you are contributing and manufacturing a product that is vatable. Now, the second layer of it now is the VAT fiscalization program that the tax authorities are driving, whereby all invoices, both invoices of your sales and invoices that are sent to you by your suppliers, will be passed through their portal, right? So the FRS on the Nigerian Revenue Service, right, will be able to see and have this data, right? And in that situation, they can also leverage on that to be able to grant you impute VAT on your qualifying item. On the double taxation comment, yes, the double taxation provision has been maintained in the current tax law, right? So it currently exists. So Nigeria has, should I say 16 double tax agreements. Those ones are still active, all right, and they take superiority over the provisions of the Nigerian Tax Act, given the fact that that's the basis on which we are now our international treaties. In terms of churches, yeah, so the exemptions for ecclesiastical activities, right, was also maintained in this in this law as well, as long as the activity is not deemed to be a trade or a business, right? That's very, very important. But one good thing that this law has done is that it has brought back educational activities, right, as part of profits companies that are exempted from tax, which was removed, right, under the law, I think 2 years or 3 years ago by one of the Finance Act amendments. Now, in terms of relief on investments, where withholding tax has been deducted, right, that has also been maintained in this law as well, right? So where you invest in shares, right, and you earn dividends as an individual, right, or you invest in bonds, or invest in treasury bills, commercial papers, or invest in any product by a bank or a financier where you earn interest. The withholding tax on the dividend or the interest are deemed to be final in the hands of the individual, right? So you don't pay any extra tax on that, right? So the withholding tax is 10%, and that will be final, right? So if you're an high earner, where your tax band is say 22%, right, on interest and dividend, right, your effective tax rate on those will be 10%. That's
Okay.
Those are the 5 questions.
Okay, thank you so much. Let me quickly just ask another batch of questions. I think you touched on some of them. So as an employee, is there a way to hedge against the new is there a way to hedge against the new personal income tax changes? With people receiving 100,000 and 200, I think that has been answered below. Please, I'd like to ask, what exactly is taxable income? What type of taxes are not taxable? For example, in the new law, gifts can be taxed, honorarium and awards. These are non-direct income, yet they are being taxed. So the person is just also asking on that. Your actual tax payable must be less subject to, okay, I think someone just trying to respond to that. So they say, are low income earners exempted from paying tax, paying VAT? So Then let me just allow, so that maybe that will be the last batch of questions. There's someone is asking or ask on the group, how will the tax reform help stock grow, especially in the banking sector? Is there any impact of this tax on some of these companies? Yeah, so then let me just allow Mr. John Oyelowo, and followed by Mr. Martins. Please ask your question. Please make it brief so that we can wrap up quickly. Thank you.
Okay, thank you very much. I want to ask question once again concerning the CGT and CIT. So, for example, let's say as an investment firm, and you have about, I'm just calling figures, let's say $50 million, you put it in the US stock market, not the Nigerian stock market, and you want to repatriate your profit back to Nigeria, you know. So now we know that Nigeria placed the law initially that worldwide income is taxable. So now from CGT going from 10% to 30%, can you please talk about that? I know you spoke about that earlier. So basically, the fulcrum of the question I want to ask is, the CGT, is it based on the total profit, or and the CIT, is it based on the total profit minus after you have paid all the employees and other kinds of expenses? Then the third question, you talked about an exemption, that if the stock is being reinvested, if the money is being reinvested into the stock market, that's for Nigerian stock market, that's there will be exemption from that. It will not be taxed as long as the money is not withdrawn. So if that is done for US stock by this investment firm, so how would it be treated? So that's first question I will ask.
Thank you. Thank you. Thank you. So next person, please. Mr. Ebi or Mrs. Ebi.
Hello, good evening.
Yeah, good evening, sir. Please go ahead.
Thank you.
Quickly.
Thank you.
Please make it
Thank
brief.
you for the Thank you for the presentation. Please, I want to ask concerning double taxation. There are situations where you find that as a federal civil servant, you are being taxed by the federal government, and then you're also taxed by the state government. With the issue of a double taxation, how would that be taken care of? Is that taken care of in this new tax law, or does it still exist? Thank you.
Okay, thank you.
Can I ask one more question, please? I've noted it down, actually.
Please go ahead.
Okay, all right. So now, in the new tax law, just like
please go ahead.
In the new, okay, thank you. In the new tax laws, so because I've tried my best to go around it, but you know, I don't know. So
please make it very brief. Yeah, thanks.
Okay, there is a particular aspect that is giving me a very serious concern, and that is about the issues of gifts, awards, honorariums, and all those things. And initially, these are not taxable under Nigerian laws. So basically, let's say, for example, I earned 10 million naira, and I've paid my own tax. So if I decided to gift 5 billion naira to my own, let's say, cousin, so I have paid my own tax, and this is a gift. So this person will also be, it doesn't mean that this person also will be taxed. If he gives to another person, it will be taxed. And it seems a very bit kind of counterproductive to the government, I mean, to the citizens. So please kindly talk about that. Thank you.
Thank you very much. Sorry, I think I have two more. Mr. Akak and Mr. Victor, please, I'll appreciate if we just make one question, please.
Okay, thank you for the presentation. One question, a quick one. How accessible will be these is it on bossman or on boss taxman? Like, how will it be easily accessible to the common person? Will there be any bureaucracy, or how will it actually work? And then a quick follow-up is that how about I think I saw somewhere in the tax law that said something about non-resident Nigerians. So non-resident Nigerians that are earning in Nigeria, will they also have to pay tax, or how do they avoid it, or what's up with that?
Okay, thank you. Then our final question. Please, any other question, we'll try and collate it and we'll see how we can get responses to them. Mr. Victor, please
Yeah,
go ahead.
thank you very much for the um, enlightenment. The only question I wanted to ask was regarding your explanation when you talked about you used an example of bread, and you talked about maybe when the logistic part brought about a VAT. So I wanted to know, let's assume this same bread was bought, and the logistic part brought this VAT as you explained. How would the government be able to know this, that the producer is not selling this price above the normal price is supposed to sell? Let's say he's supposed to sell the bread by 5 naira, but he's now selling it 9 naira based on the fact that he bought the nylon at an expensive price. How would the government be able to know that, okay, this VAT has not been included in the product? I mean, the prices of the product he's selling, he hasn't added the VAT on it. Thank you.
Thank you very much. So we'll now take the response. Thank you very much, sir.
Okay. I wrote down almost like 7 or 8 questions. Right, so I'll just take them as quickly as possible.
Yeah.
Right, so
Thank you.
are the low-income individuals exempt from paying VAT? Unfortunately, they are not exempted from paying VAT. What they're exempted from is charging VAT and complying with VAT. But bearing in mind that the expectation is that the small businesses or low-income earners are living within the same ecosystem, right? Except if you pick out Lagos, Port Harcourt, Abuja, right, Kano, right? It's expected that the small businesses and low-income earners are within the same ecosystem, where if you have a small business now, a small barbing shop, and you want to barb your hair, right? The barber is not required to charge VAT. So if you go there to go and barb your hair, right, they won't charge you VAT, right? Because they're a small business, they're not going to charge VAT. You're a low income earner, right? You're not paying VAT, right? So it's like small businesses too, right? They are small businesses. So if you want, let's say audit services now, you won't come if you come to PwC, right? PwC will charge you VAT, right? But if you go to a smaller accounting firm, right, they will not charge you VAT because they're a small business. So it's expected that those small businesses or low income earners operate within the same ecosystem, right? And VAT will not be consumed at that level. So the other point on VAT, which is the point I wanted to, the last question I was just asked, is that there is no way, because the prices of these products are not regulated. So what that means is that it's a free market, and manufacturers can price their goods at whatever price they deem fit based on their cost profile. Now, if government has made the avenues within the law now whereby you can claim your input VAT, right, and you still collect it from the government and you still embed it in your price, right? The expectation, right, is that when other bakeries start to factor it in their price, right, demand will go from your own bakery to the other bakery and you're forced to adjust, right? So it's because the prices are not regulated, and the government is really banking on the market forces to make those alignment. In terms of ensuring those businesses pass along these benefits to the customers. The other question around hedging against tax, right? I don't think you can hedge against tax, right? I just think that you can you can plan your affairs in a way that you pay the minimum amount of tax based on the law, right? Which is tax planning. Now, what this law has also done is to say that where you carried out an avoidance scheme, you are to prepare and disclose to the tax authorities, right? So you have to disclose to the tax authorities your tax avoidance scheme, all right? And this is something that happens not only in Nigeria, but outside as well, right? And government can then now look at it and say, okay, this incentive that we're giving taxpayers, is this something we want to retain? Is this something that is being abused, right? And they can use that to amend the law as they deem fit. The other aspect of it is the term award, honorarium, prizes, right, that has been embedded as part of income to be subject to tax, right? I just double checked then so that gifts wasn't one of them, right? But the expectation is that for all these items, right, you would have done something, right? And you are being paid something, right? So under the outgoing laws, it wasn't taxable. But now, right, if you go and speak at an event and you're giving an honorarium, you have to declare and pay taxes. You are given an award in cash, you have to declare and pay. But depending on the nature of the award. Now, if the award is not in cash, but is a material item, how do you determine what the valuation is that will then be utilized for tax purposes? What of if the award is in virtual currency that the value from trades, what valuation am I going to use? So those are some of the complexities that will come with these new rules. On the aspect of selling shares, right? The exemption, the investment exemption only applies when you're selling shares in a Nigerian company, right? So if you are selling shares in a foreign company, right, those shares, though any capital gain on that transaction will be taxable, except if, right, the value of the disposal proceeds, right, is less than 150 million if you convert it to naira, and chargeable gain, right, is not more than 10 million naira. If you convert to naira, right? So you will invest in US stocks and you are selling, right? And you had mentioned the term, number $50 million. If there's any capital gain on that, you'll be paying capital gain tax in Nigeria. In terms of the calculation of the gain and the profit that will be taxed, right? In determining your taxable profit, it is all your income deducting all your liable costs, right? That you would then get, which will include your staff costs, your rent, depreciation on your assets, right? As the case may be, although the decision might be allowed because you claim capital allowance, right? Any other consumables for the business, that's what will determine your profits. In terms of chargeable gain, you take the disposal proceed less the cost, right? Now that's when you now determine your capital gain. Now you take your trading profit, your capital gain, you add everything together. That is what will then be subject to tax, right? Where you are not a small company at the rate of 30%, right? In terms of the non-residents, right? One of the things that this new law has done is if you are a non-resident, you only be taxed on income that is sourced from Nigeria, right? So the first thing we need to do, let me backtrack. The first thing you need to do is if you're a non-resident, if you're a non-resident, fine. But because we've defined what a resident is, right? So there was no definition in the law before, right? But now we have defined what a resident is. Now a resident, right, you have to meet any of 5 conditions, right? And one is you have a permanent place available for your use in Nigeria, right? That's 1. 2, you are domiciled in Nigeria. 3, you have economic ties and family ties in Nigeria, right? Another one is that you are in the country for 183 days or more a year. So if you have a foreign expatriate in Nigeria, right, that is working for a company in Nigeria, right, that individual, right, will be deemed to be resident in Nigeria. Previously, that individual was only taxed on his Nigerian sourced income, right? So income tied to his employment activity, either paid in Nigeria or paid offshore. But now what the law is saying is because I've deemed that individual to be resident in Nigeria, right, we're going to tax that individual on his worldwide income, right? So let the individual even have a property in Germany where he's earning rent. Let it have investment in the US stock exchange market, right? Because it's deemed to be resident in Nigeria, the tax return that German expatriate will file with the tax authority in Nigeria would include the employment income from the Nigerian employer, would include his rent from his German property, would include any dividend he received from the US stocks, right? Because it's taxed on his worldwide income once it's deemed to be resident, right? Now, but when you are non-resident, you only be taxed on your Nigerian sourced income. Now, the last question I will touch on here is interaction between federal and state governments as it relates to double taxation. Now, bearing in mind that this committee that drove these laws, right, was a federal committee because they were enacted by the president, right? So a lot of the laws that have been enacted today are mainly at the federal level, even though some of the state bodies will implement many of the provisions, but they are still federal laws. The onus now is on the state authorities and the state national assemblies to start to repeal some of the laws that conflict, right, or will lead to double taxation or multiple taxation, as the case may be, in terms of repealing their consumption tax laws, and also all those laws that attempt to be nuisance taxes, right? So the expectation is that that should happen subsequently at the state government level, right? Following what has been done now at the federal level, right? So it's not cast in stone, right? But definitely what has happened now is a step in the right direction. Thank you.
Thank you so much, Mr. Olaniyi. Thank you for your time and thank you for breaking down all these questions. Tax can sometimes be a very complex subject matter and with a lot of rules and guidelines, but you've been able to at least come to our level to break it down so that we can at least understand. Yeah, so I know some of us, we may still have questions. It's just continue to just watch as things unfolds to be able to understand how the implementation would be. We would like to once again just appreciate Mr. Babatunde Olaniyi for sparing us this time despite his tight schedule, and we really appreciate that the community. Please, members, please, I would like that you drop your feedback on the group. I will post some, I'll send him some so that he can also see based on things we have learned, and you can also see our feedback. So please post it on the group so that I will also share some with him and directly with him. Thank you so much, and we have really enjoyed this subject matter, and we are hoping that it will be to our benefit and also help us in planning and compliance. Thank you so much, sir.
Thank you for having me. Bye.
Bye.